Okay. Been a while since the last webinar, so I do have a few uh, analysis to go through, and I'll go through all of them. We're doing a webinar tomorrow, and obviously I'll have more time then to go through all the pairs. So I'll just answer all the emails today because there's quite a build up after being in Sydney for a week. Deep joy. Um, Today we have the RBA, and we can see that there was a minor. I would say there's some pretty good odds that there's not going to be a rate cut. And then on the 28th, there was a data announcement. I think there was a CPI figure or something on the 28th last week, and the odds of a drop. The odds of a RBA drop dropped down to 16%, and then this bloke, no, not that muppet, Terry McCracken, um, who's considered to have an ear inside the RBA, came out with this article, and so then things jumped up a bit. The odds of a rate cut today. I personally don't think they will cut rates. I'm in the 37% camp. They may open the door for a future rate cut by saying that they recognise the obviously interest other countries lowering interest rates. We've had a raft of them recently from obviously the Swiss National Bank through to Canada and Singapore. I think that Glenn Stevens won't surprise the market. I think he'll just say, right now he's on the fence saying low interest rates are here to stay. He may now recognise the fact that he might have to move. So I don't see a rate cut coming, but I do see them opening the door for a potential rate cut. And so the Aussie dollar should remain reasonably strong, I would have thought, on that news. Obviously, if he opens the door or he does do a rate cut, then you'll get further weakness. So, if you're in Aussie dollar or you have Aussie dollar exposure through Euro Aussie or Pound Aussie, um, I'd be careful with those trades. Maybe take half of your risk off the table or half your trade off the table. This Pound Aussie 4 hour I'm looking at in terms of the cyclicity. We're now seeing the weakness in the Aussie pushing this higher. That's something I'll be looking at the end of this 4 hour period, just before the RBA. But if you're in something, you might look to protect your profit or protect your capital. Personally, I'll be probably just going in with a minor amount on this 4 hour little swing here, and then add to it after the RBA if we get the movement going in the right direction. But yeah, that's the sort of movement that I like to look at. The daily was overdone, has peeled off a bit. There's no divergence there for a phase two, so that suggests to me that it's going to go up and make a higher high in this wave and give us a divergence for a potential phase two trade on the daily. But until it shows us divergence, I'm more than willing to continue with this bullish sentiment. The POMs had some good data last night in the manufacturing. I think it was manufacturing. Yeah, 53. That's nice and strong. And so I'm still happy to be long the pound. And in the 4 hour, if it's going to make a higher high, I can look at getting a risk reward on this that is reasonable. So 130 pip stop, and you're looking at a 200 pip target. That's roughly 1.5 to 1 just to this high. So that's effective for me. Obviously, if I'm in the trade well before RBA and RBA do cut rates, well then that high is going to get monstered, and you'll be looking closer to sort of 96 as a new high. So, coming to your emails, before I do that, the only other I've got this Kiwi CAD trade on. didn't like this price action, but there's, the bounce in oil is holding there. So this is a day trade. This engulfing bar is, not going to really move my stop on that, but this support here at 91.60 is holding, and yeah, so I'll be looking to, at this stage, my stop's still under here with this engulfing. Could be bearish, I haven't measured it, but it's a seller bar at least, but it's an engulfing bar. The market could head up. So that's just a matter of monitoring that and managing it. Okay. Right. So coming to the first one, gentleman is looking at the Euro Kiwi, and fair enough. He has Fibonacci, yeah, that's looking good, 61.8, giving some resistance. He's noticed no support, but he's got this level here. Below the 50 EMAs, no, that's correct. Bearish price action, yes. EMA resistance, not really, that's correct. RSI convergence, yep. Showing a hidden divergence as well, yep. Trendline resistance, no. Score a 6 out of 10. Support around 1.5. That's fair enough. But what I liked about this compared to the Euro Aussie is that it's under most of this price action. Yeah, so there's the big resistance here, which it didn't really get to. At what's that, 57.50. This low, it's come back to test, which is great. I like that. And it's under most of this price action that we can see. If we push that up, yeah, it's come back to these lows. So it was a pretty big level that it's on against, and you'd expect price to sort of come back down to these levels. So you compare that to the Euro Aussie, which is sort of above all this price action. Yeah, has to get back through these support levels, whereas the Kiwi is under these support levels. Yeah. So there's a little difference there, and that's why some people might be looking at the Euro Aussie, and it could well go on and trade lower too. But we can see in the comparison to this support level is quite key or quite strong. The Kiwi's under all of that. Yeah, so compare the Euro Kiwi, it's under most of this support, the larger support. Yeah, sure, there's something across there, but that's a little bit not as strong because it got monstered in recent times. And then there's something all the way down here. But you compare that to the Euro Aussie, I think it's a better setup. Why aren't you showing me more history? It's a better setup than the Euro Kiwi, because it's got far more support down here. Yep. Get through that, and you're looking back at $1.28, something like that, and that could well happen. But that's a good thing to be looking at. It's a fair trade recommendation or trade call. Being short Euro, you can barely go wrong there. So I do like that, and I like that price action. If you wanted to wait to get through here, that's okay, but you then need to go down into the 4-hour cyclicity and be trading on that, or 1 hour once it gets through there. But I'm fairly confident it would, with this kind of price action going on it. Yep. So that's a good setup. No target set. Stop loss is 200 pips. Risking 100 or risking 0.25% on it. Well and good. You're not online, are you, mate? No. Okay. I'll come to this. I'll read the email out first before we get to this. Right, trades in place. Dollar Mexican. Mexican or Mexican. Dollar Mexican did what I expected. Took out the last two highs to make a higher high. I toyed with closing the trade on Friday night. I chose not to do it as this is game playing and not my part of my trading plan. Okay, so you're long this, and Friday night this bar here. Okay, yeah, that's what you're talking about. This email came in yesterday, right? So took half instead. I took half the trade and moved my stop loss 1 ATR away from the low of the bar. Okay, so 1 ATR below that bar, fair enough, and took half your profit. My stop loss plan is to use ATR as the stop loss size from the entry bar. Okay, provided that is below the ring high, ring low, and this on my other trades. Fair enough. Under review is the pound. Shorting the pound. Okay. Euro pound long. Long the euro pound. That's already happening. Yesterday's selling. Yeah. Going long. I think not really comfortable with being long euro. I think we'll see euro strength as funds move into euro equities. We'll review this base view over the next few days, especially against the likes of CAD and Kiwi and Aussie. Yeah, I'm not so sure you'd want to be long euros just yet. Pound yen. A couple of people looking at that. It really doesn't interest me, but each their own. Double bottom plus divergence. Yeah, well, you could almost say a triple bottom, but still a good little interest in that. Dollar Swiss has clearly decided that the reaction of the Swiss National Bank was too strong. Lots of money now leaving Swiss and heading somewhere else safe. Yeah, it was always going to happen that this kind of reaction is way overdone. Why would you park your money in Switzerland when they're charging you for the effort? So certainly this has come back up. Not that you could really be looking at trading it according to our rules. It'd be some other strategy that you're looking at, not something that I would teach or advise. Certainly being long US dollar and short Swiss is a good play. I'll be looking at the sort of 4-hour cyclicity as trying to get in on that. Post share, there's no kind of setup there yet. Dollar CAD divergence from an overextension. Yeah, I think I saw that too. Certainly is a divergence. Certainly is selling. There's certainly an opportunity there. The only thing you need to find, and I haven't had a look, is why did it stop there? Is there a big resistance? And I think it's a bit higher, if memory serves me. Could argue that level, that low, that high. I've got a couple of highs here. 27.30, strong resistance. Yep. Found that turned off. Oil's found a bit of a support level around 45 and is moving higher. It's now back at 49. So there is a phase 2 trade there if you want to try and trade against the trend. I'd prefer to leave it alone, but that's me. I just can't sell US dollars at the moment. Technically, you have divergence, you have resistance. There is the start of a trade there. I have to draw the fib on the monthly as this has gone through the right out. There's fib resistance that you could argue. There's 2 out of, you got 3 reasons. You got 4 reasons there for a trade, and 4 is what you need for phase 2 trade. Yeah. I just want to get down to where you talk about you're looking at a lot. Aussie Kiwi short, Kiwi CAD long. The Swiss yen chart, the gap between the high and last high. Let's bring up your Swiss yen chart. This one. Safe haven money went here. This is Swiss yen, not. Alright. So what are you saying? You're saying the gap between the previous high and the current price is now 200 pips, which is the smallest of all the Swiss pairs. Suggests to me that the safe haven money went from Swiss to yen after the initial panic. Yep. Yen was, the yen's going nowhere really, and would be why where people are parking. I completely agree with you. So there's no trade here. I think you're just pointing it out, but you'd expect the yen to continue to strengthen against the Swiss, especially when there's you're getting charged to hold money in Switzerland. Alright, so the Kiwi CAD trend continuation, higher highs and higher lows, finding support, horizontal bullish price action, Fib retracement. Yep, there was a good support level there that ran from. You're going off the 20 EMA, which shows you the 618. We were looking at this in class last week. You could argue that that's the start of this move, being the first close above the 50, and this is all part of phase 1. And the 50 retracement was the strength, or if you're wanting to say from there the 618, which is I think where you've got, and you're saying this is the cycle. Either one would suffice. It's just I prefer to say, well, that's there, even if you went to that low, but it's this move sort of started it and broke this previous high. Yeah, and you would have gone into the trade yesterday, have gone across here. You've got this engulfing seller bar. There's no reason to move your stop just yet. Yep. All good. Okay, pound yen. False breakout of trend line. Okay, so you've got a strong trend line going there. Not sure where. Not sure how you're getting that line in. Come here. Yeah, I don't know where you're getting that trend line from. Not sure where that trend line's coming from. Certainly has been a pretty strong cycling action. It's on the 200 EMA. It's just above the major support line though. By quite a margin, 200 pips. Yeah. Okay. Not exactly seeing that trend line, but it looks good for you. The support line is a little bit lower. We've drawn the fib from that low to that high. That's okay, and that gives you the 61.8. That's good. So what's your checklist? Where's your checklist? Horizontal support, higher highs, bullish price action, fib retracement, above 50 and 200. Oh, no you're not. No you're not. You're nowhere near it. You're above the 200. You're only above the 200. Alright, so that's a 0. Above the 50 is a 0. Trendline support, yes, but I find that dubious because I couldn't find one. RSI convergence. You don't have convergence. You have a low, a lower low, a lower low. A sort of same low, that's divergence. Then a higher low. I would say you have convergence, but I would say yes, you do. Moving average support, yes, that's good. You've got the 200, no resistance in the way. Well, it's miles away. Hidden divergence, do we? And RSI is below 80%. If we're going long, okay, yeah. So it gives you 10. I'd say 9, and I haven't checked hidden divergence because you're not above the moving averages, right? And hidden divergence, well, back here it was what, 12, here it was 12.1. Yeah, class C, maybe class A. Just don't know how, if need to see bullish price action, obviously, and that's not there yet. And it wasn't there yet there. You're inside buyer bar, inside seller bar, I think it was. Yeah, inside seller bar is nothing yet to get excited about. Perhaps tomorrow, but you do have monetary policy on the pound on Thursday night, 11 o'clock Sydney time. The BOE is coming out, so there may be something there when you see price action, but I don't see it yet. And just be careful with your moving averages, okay? You're not above both of them. I'd ask you, are you above the 50 and the 200 for a reason? Okay. Pound yen. Oh, wait up. You had quite a looking potential long if it gives a ring low or bullish engulfing on the supports. Stop loss seems prohibitive, so welcome your thoughts on the pound yen. Well, that'll depend on where your entry is, but yeah, your stop would be under here. Okay, it might be 300 pips, but this thing, could do easily quite a few hundred pips. Have a look at the ATR, the average range on it. The 79.65 level across here. Yeah, that seems to be a bit of resistance there, which is around 180, 70. Stop loss seems nasty, could possibly place it below. So 385 pips stop loss. Yeah, but look at the ATR and look how 600 pips could easily be done. Let's say you're getting in here somewhere. Even back to this previous high, you're talking 1,000, so 300 pips is not that much when you're looking at 1,000. Even if you go to this, it's 900, so that's 3 to 1. I would notice the bullish divergence. If price follows suit, then I'll acknowledge the convergence. Okay. Yeah. but you've just got to be careful about those EMAs because you're not above them, you're only above one. Okay, so another few of us looking at the Kiwi CAD. This one here, higher highs above the moving EMA support. Yes, yes. Tracement, no trend line, no resistance, hidden divergence, not noted. It wasn't really. Cool. 1/4%. The fibs from here, yes. Moving average, all good. Fundamentals, yeah, look, the fundamentals on this is that the Kiwi should outperform the CAD. Commodity prices are bouncing from oil to the only commodity they're not bouncing is iron ore, which is why the Aussie should probably be weaker. But most agriculture's, livestock, and metals are all bouncing, so that's good for both the Kiwi and the CAD. Whether oil holds, I don't know. Oil's got a bit of resistance coming up. If we look at what's under here, you look at oil. There's that 50-cent level which it's coming up to. Come on. There's a bit of resistance seen here, but this is the oil price action and why the CAD's getting a little stronger. That's 54. Yeah, around there. You'd expect something, or even here at 51. It's above the 49, trading at 49.70 at the moment. So it's could find some resistance and therefore start to fall away again. But we can see, sugar's not bouncing, neither is wheat, but coffee and corn, cotton, soybeans also sort of stopped. And then we've got copper found a base, and oil's found a base. So that bodes well for the Canadian being a high commodity currency, and so is the Kiwi. Yeah. So I'd say that which one's going to outperform? Well, the Kiwi's got the higher interest rates, so you'd expect them to perform better than the CAD. And so fundamentally, the Kiwi CAD trade looks good. Okay, and your analysis is all sound too. So well done. We're looking at this one. Wheeler may screw it up on Wednesday. Risk reward is marginal. If you're looking at that as your potential target, yeah, which you've noted your call this your extension is here. If you're going to have a target on it, we could be looking at this, which I'd say is your 1.618 or something like that. Generally when I'm setting a target, I do target the 1.618, but you've noted this resistance level here, and that risk reward is 2.61. Okay, ATR trade management. But if you're going down to normal trade management, your risk reward is 1.57. Yeah, that is marginal. R to R too small, fair enough. You don't want to do it. I went in on this low test bar and did not add to it, but yes, the risk reward was better. If you're looking at using the ATR, perhaps that gives you a better risk reward. And you do note that Wheeler is talking on Wednesday, yeah, and we all know how central bankers, 10 a.m. on tomorrow, we all know they generally stuff things up. So if you're not in the trade, I certainly wouldn't be looking at it now. But if you're trying to manage the trade, then Yeah, it's a matter of waiting until we see some reason to move the stop, and we don't have that reason just yet. Okay. And if you want to walk away from the trade, that's okay too. There's nothing wrong with doing that. I've just taken an Aussie CAD position when looking for continuation divergence from a move that starts below the 15200 EMA. Should I be looking from where I take the fib measurement when it crosses 50 or the beginning of the long move? Good question. Good question. So, question was, I've just taken an Aussie CAD trade. You've got a fib from there to there, and that's giving you support at the 50 of the larger move. That's a good reason. You've also measured the cycle, which is from here to there, and the cycle is giving you, what's this one, the 618 support. So you've got two reasons there. You've got a sort of soft horizontal here, stronger one back down here, a bit of resistance here, which I would have said is parity, a nice round number of 1. Don't have trendline support. This is not trendline support. However, when you're saying continuation divergence, which is another way of saying hidden divergence, do you look at the start of the move or this previous major low? Continuation divergence is for cycle to cycle. So this is your cycle here, and so looking at that, you would suggest that you do have continuation divergence. Yep. So what's this? The Aussie CAD. Aussie CAD. So what you're looking at is the cycle. Right? When you continuation divergence, you look at from cycle to cycle, and that's where the cycle started. Yeah, started there. So we certainly do have continuation divergence there. Another cycle is from here to here. Do you have continuation divergence? Yep, you have a minor divergence there. Okay. So it's not from this, because this was a seller's market. Yep. And when it went above the 50, you're going, well, hang on a minute, we're not getting lower lows. We breached this low, pushed through that, breached this high, then the structure of this downtrend is over. So now we're looking at uptrend, and so then therefore you're looking from this one here. I tend not to use continuation divergence from or in the first cycle. You generally want to use it in the second cycle onwards if it appears. First cycle is a little harder to sort of pick it up on. But, okay. Direction daily long entry stop risk reward 1.8. Okay. You're now in. There's not much you can do right now. You've got a higher high. It's a bearish bar. You've got RBA out. It's your stops under here, and hopefully that'll be enough to protect the trade during that. Convergence on full move, divergence from above 50A. Yep, okay, no worries. Economic calendar, Aussie tomorrow. Yeah, RBA. So, yeah, with the RBA out today, you may have, well, some people might have decided not to go into an Aussie trade. Mexican. This came in last week, and we've discussed this because you're in the trade, and you seem to have managed it pretty well. Having got in here, and it's going in your favour, and you've taken some profit. That ring low for your entry. Here's your cyclicity off the 382. You've got this level, I'm not sure what that is. Horizontal support, yes. Long series of closes. Okay, across here. Fair enough. It's all good. Yeah, I like that. Okay. Now we've got a couple in Word and stuff. So, Aussie CAD, PDF, Aussie CAD, PDF. Right. What are we looking at? support line here, resistance line there, drawing your fib. I would just get it a little bit to the bottom of that bar. It sort of seem to go on from the close of that, or somewhere in the middle of this bar. It would be better if it was just to the bottom of that bar. Yeah. Okay. Yeah. You don't give me any sort of. There's no. There's only one page, so I don't see any sort of notes on this. But I presume you're looking to go long, the way you've drawn your fib. And as I said previously, yeah, there's buying there, but you've got the RBA today. So you sent this to me yesterday. I think it's probably just a matter of being patient, waiting for RBA out, and then have a look, because we know, and having had a look at the Aussie CAD now, the CAD got pretty strong overnight on oil, but yeah, the RBA would have been the reason why I wouldn't take an Aussie CAD trade. Yep. Okay. Euro Aussie, again, you haven't really given me any notes. You've noted this resistance level here. This is probably a day old. You notice resistance level here. You've gone the big move, which is the 50. That's fine. But I've also been looking at the cycle as well. So you draw both. Yeah. Come on, you piece of crap. I'd be drawing sort of both Fibonacci's. So the cycle, which is this, there's your cycle there. Yep, 786 right on that resistance level. And also the larger move, if you're so inclined. And we can see that on the larger move, yeah, the 50 was that resistance there. But on the cycle, the 786 was the resistance. Yeah. So either one, it's probably good to have both. Certainly gives you there. Then we get an inside seller bar after seeing this, so it's not exactly a ring high just yet, and not exactly convincing by the sellers, closing right on the 50, the 200's right there as well. You know, when price is right on both of those, it kind of tells me it's not going really, hasn't gone very far, and probably not going far. And when you look at it, and you've got price going above, and then you've got price going below the 50. And if you back off a bit, you could argue, okay, this is going to be, you know, almost 1,000 pips, but you could argue it's almost range bound. Yeah. And yeah, okay, that's almost 2,000 pips. From there to there is 1,200 pips. But when the moving averages are flat and price is just chopping either side of it, that's what I would suggest you got. Whereas the Euro Kiwi, we're broken out of that, and we're now getting a setup underneath it. So I think that's the better setup if out of the two. Can you please show me how to add what, mate? Not sure what you're asking. How to add what? Yeah. So draw both fibs, but I don't really see this pair going very far at all. It looks to be more range bound, and right now you're not getting the price action to indicate anything. With an inside doji bar closing right on the 50, it's just leave it alone. Wait till you see the sentiment build. How the put the 200 at EMA in MT4. Yeah, simple. Insert, indicator, trend, moving average. Make the period 200 exponential on the close. Make the color you want. Visualization, all time frames. Show data in the window. Yep. Okay. Let's insert indicators, trend, moving average. If you didn't get that, you can watch it in the video. Okay. That's that one. Okay, then we've got a whole bunch from Perth on these here. Okay. What is this? This is what? Euro Aussie phase 2 long. Strong horizontal resistance, RSI divergence, bearish price action, fib extensions, flat, bullish, range. Okay, you're saying it's range. Well, you know what, that's, I kind of probably agree with you there, which I just pointed out. So you're trading this as a range. You still need to see bearish price action. You're not seeing that. Fib extension, I don't know, I can't really see your fib. You've just drawn from there to there, judging by where these levels are at. So you don't have fib extension. Right? To get a fib extension, you're not going to really get one in there. You draw this and you're not there, yeah? If you can't say that this is anything to look at either. But what you would be doing, if this is, you're saying this is range and it's going back down to these lows, is potentially saying, well, I do have fib resistance. It's not extension resistance, but it's retracement resistance, but it's still resistance. Yeah. So I don't see fib extension. We don't see bearish price action yet. So it's a matter of being patient for that to appear. RSI divergence, I don't see that either. There's no divergence, it's all convergence. Okay, so there's two things I don't see, RSI divergence and fib extension, and I don't see bearish price action. So whilst I do think it might be range bound, there's no indication for a trade yet. And bullish chart pattern, you need to tell me what that chart pattern is. You know, what sort of thing is it? Is it a consolidation breakout? Is it a flag pattern? Is it a head and shoulder pattern? What is the bullish chart pattern? Just writing it doesn't mean shit. Okay, you've got to identify what the chart pattern is. So what do we got here? Dollar yen. No, please no. Trend reversal, phase 2 short. Interesting. Hang on a sec. What was that? You got an order to go short here? Mate, what are you doing? Why are you getting short there? Your target there? Well, that's good luck, I hope so. We're getting short in the middle here. There's nothing. It's above the 50 to start with. So I'm not sure why you're doing that. Why? RSI divergence. Bullshit. It's flat on the 50. Just prices as well. It's going nowhere. You've got lower highs and you've got a double bottom here. It's doing freaking nothing. You should not be looking at this. Phase 2. What's this moving average? That a 20. That needs to be 50. And if you look, the 50 is there. I think you must have a 20 EMA. I don't mind you sending me analysis, but when you start taking trades out in the middle of nowhere, which are completely against the rules, then it irks me. It's not even the 20. I don't know what you got. It's what kind of moving? It's not even a. It must be a simple moving average. It's certainly not exponential. I don't know what that yellow line is. Whatever it is, get it off your screens and make your moving average at least have the 50 exponential on the close. Okay. That yen trade is going to cost you. If it gets to that, then it's more arse than class, because there is no reason for you to be trading the yen. There is absolutely no signal either way to go long or short here. It is doing nothing. That's why the 50 EMA has gone flat. Look where all the closing prices are. Look at the sentiment. Why are you trading in the middle of all that shit? You know, if anything, there's a bit of a support there, and you'd want to be long the US dollar rather than short it. If it gets back to there, you know, I'll be the son of a monkey's uncle, but I'll be buying the hell out of it if it does. Unlikely to happen. For that to happen, for the yen to get down there, then the yen's got to get extremely bullish. And for the yen to get extremely bullish, then the US would have to be under attack by the Russians. Unlikely to happen, isn't it? It just irks me that you're trading out in the middle of fucking nowhere. Really not. This is your yen again. Yeah. Why are you trading there? It just does not make sense. And this thing could be why you're looking at it, but still, you should not be trading there. I mean, your entry should be under all of this here. There's no indication. If you're saying this, you know, this moving average is what you're going off, because it's tagged it there, and now you're underneath that, and you're expecting a phase 2 down. Unlikely to get all the way down there, but why are you jumping the gun? You should got to see price getting out below that and going with that sentiment. Price hasn't done that yet, so okay, I'll forgive you for sort of looking at it because of this moving average. On that, get the right moving average on, and hopefully you won't be looking at it. But trading in the middle of this is unforgivable. That's just no man's land, and price is not going anywhere. Is it stuck in a wedge? Yeah, it's stuck in a wedge. More than a wedge. You know, you got that support line there. You got a double bottom here, and you got this. Yeah, trading the break out of the wedge potentially. Not something I'd really get caught up in or want to friggin' play around with. I'd like to see price out of this and preferably cycle out above it, just like it did here. It was stuck in a wedge across here. If those of you remember this one, it was stuck in a wedge there, and it was an ascending triangle, and we can see it. When price breaks out, yep, happy days, comes back and confirms, then you're trading with it. That's when I'll get interested. Until that happens, is just leave the fuck alone. Right? Certainly not get short in the middle of nowhere. Sorry for the swearing, but I'm angry now. What the hell's going on here? Strong horizontal support. Pound Aussie. 4 hour. I know you sent this to me last week. I don't know why lost for words. Why your fibs starts there and why it finishes there. That doesn't make any sense. You draw those two lines together. I don't know. RSI divergence. Yeah, there was RSI divergence across here. Market then continued to rally. and it's gone on and rallied even higher, and you would have been stopped out. Trend reversal, phase 2 short. Look, if you're going to trade this pound Aussie 4 hour phase 2, right, this is where you're looking to get in. Yes, there was strong resistance there, granted. At this point in time, I mean, you're looking at getting in here, right? And yes, there was RSI divergence, and yes, there was. You could even say that you're at extension. If you wanted to get a little bit more extension resistance in there, you could probably add in another extension of 2.272. And even 2.618, but this is just getting inventive to try and fit the trade. So we can see the 2.618 was resistance there along with that resistance level. There's divergence there, but what don't you see? Right? Where you got into the trade, what don't you see? And this is what I get annoyed at, is you've got to be looking at the price action, right? Let me take everything else off. Let me blow this up a bit, because I'm blowing up at you. I'm sorry to be blowing up at you, but it's annoying, right? At this point, you could say, yeah, I've got divergence, but do we trade on engulfing seller bars? No. You may have been looking at shorting this for similar reasons over here after we get this ring high, and you could be going short there, yeah, and you would have got taken out. There was a double top and there was divergence. It was at this point that I got out of my long trade. But what you don't have here, what you do not have at this point in time when you enter the trade, is bearish price action. You've got an engulfing bar, which we don't trade on. You may trade with the trend on an engulfing bar, but certainly not against the trend. You've got an inside seller bar, nothing to trade on. An engulfing buyer bar, nothing to trade on. There's certainly no indication at this point in time that you should be getting short. And even if you were, your risk-reward ratio, if you're targeting the 50, is friggin' crap. So it's just look at what you're doing, and I mean, how'd you get the risk-reward ratio to it? Oh, that's because you're going all the way down here. And why is your stop there? You know, there's no reason for your stop to be there. Your stop, if you're going to get into this, should be above resistance levels. And this resistance of 189, or let's call it $1.90, you know, wasn't the resistance level. The resistance is up here, you know, at 92. Mate, I think you would need to get in to see your coach, and today, if not this week. Okay? I'm looking to buy that. You're going to sell it. Well, you sold it over here when I was getting out of my long trade, but that's another freaking issue. Oh yeah, David Long must send. Alright. Goodness. Continuation 4-hour UK. Lower highs and lower lows. How? How do you have lower highs, lower lows? By crikey, I hope you're sending this chart to me well after you got into the trade. But judging by where you've drawn your fib, you haven't. You're looking at this. Lower highs, lower lows. Where? Got in there. For what purpose? To get short. Trend line resistance. What trend line? That's not a trend line. That should be up there, and you know, you're totally ignoring all this. It should be up there. Fibula retracement resistance. No. That's support. You've drawn from there to there, so 61.8 is support of this move back down after going this move. That's support. Bearish price action. Where? Nothing. Certainly not where you got in. Below the moving averages. Well, yeah, you are there, but that's not the 50 EMA. That's, as we've established, as some other freaking thing. I don't even know if it's an exponential. It looks exponential actually, but it's certainly not the 50. Might be the 18. Alright, you need more training, son. EuroCAD, what the hell's it done? Say it's fallen. There's that price action there that you're looking at. Wouldn't have got to your target. It didn't make a lower low. I don't see it. Yeah, certainly big downtrend, but it's just sideways right now. I mean, look at it. You got that support level there. You got this, sideways. Nowhere fast. 4 hour action, there was no lower lows. When you got in here, right? There were no lower lows. How's that a lower low? What is that? I don't see how you can say that's a lower low. For Pete's sake. Right, I think I've had enough for today. I don't want to look at it anymore. What's this? Kiwi dollar. 4 hour divergence Fibonacci. Now we're talking. Yeah, I mean, New Zealand dollar. I don't know what time frame this is. Are you looking at the 4 hour? Yes, there's divergence. Why are you trading there? I mean, I've just done. Do you see this and just pull the trigger on it? You're not waiting for price action to confirm. What's this divergence? For fuck's sake. It's hard to get divergence when the market's going sideways there, but let's say you draw this one here. You've got the 2 and the 2.272, 1.618. I mean, I know this is quite a while ago. I just sent it. 22nd of January. 22nd of January, so you're looking in here. You do get a phase 2 on the 4 hour, granted. And it was off the 1.618, or trying to find it. I don't know if there's any support level there. Certainly not. Yeah, you could say there's support there, the horizontal support. It's sort of under that, isn't it? Mate, you need to do some more research. You certainly need more coaching, because there's so much wrong with you just buying into stuff when there's no real research behind it. It's all FOMO trading by the look of it. Well, that's not FOMO trading, that's anti-FOMO trading, trying to trade against the trend. Yeah, much work to be done there, my friend. I will send you an email. You need to see the coach. On that note, guys, I'm going to try and calm down a bit and get ready for the RBA. Be careful with it if you are in it. There's a lot of, it could go 50-50 either way. It could happen, and the Aussie dollar will come further off. It could open the door, and the Aussie dollar will weaken somewhat, but not hugely. Or he doesn't change a thing in the commentary, and he doesn't change rates, then the Aussie dollar will probably rally. So if you are in it, there's normally I can work out if they're going to be doing it or not, but there's just too much question about it. Um, so I do think that they'll open the door to it, but they're not going to do it. That's my call, which means the Aussie will get weaker somewhat. You know, and things like this pound Aussie 4 hour may should do all right. Although I want to see this. This bar closes at 1 o'clock, right? An hour and a half before OBA. I want that to be a buy bar, not a sell bar. So I may not do the trade until I see that sentiment. Euro CAD, leave it alone. Not doing anything. Euro Kiwi is probably the setup of the day. Potential trade there. I'll leave that on my screens. Euro Aussie, no, I'm not interested in it. Not compared to the Euro CAD. These ones I've already got in. Aussie CAD, no, I'm not interested in that. You guys might be. I'll pass. Dollar Mexicant. Pound yen, yeah, I'm not interested in that. No buying there. Not enough support. Euro pound daily is sort of trending. Be looking for some sort of resistance there, and potential short on that, but stay away from that one as well. So then that brings us to what I'll be looking at. All of that. Phase 2 trade on the dollar CAD if you want it. If you want it. I'll pass on it. But yeah. Dollar CAD, potential phase 2 trade. No divergence on the Kiwi, no divergence on the Aussie. Pound hanging on for grim death to that 150. Yeah. Right out. Guys, thank you for your time. I'll see you tomorrow at the same time at 9:30, and we can discuss what the Aussie's done, and then I'll go through all the charts that we can, because there's no doubt there'll be very few emails, having gone through all of these ones so far. Sorry for losing my temper, but it just really bugs me. People don't listen and don't follow the rules. Okay, go have a drink. Yeah, right out. Bit early, but yeah. Thanks, guys. I'll talk to you tomorrow. Cheers.